What's up, guys? Welcome back to another market analysis. Welcome back to another week. This is the last week of February, right? We have Friday being the 28th. So this is going to be the last week of February, which means the end of the month. Next week, we're going to have NFP, which is going to be the first week of March. Okay, so let's end this week. Well, let's end this month, this entire month off good, guys. We're going to talk about the charts. We're going to talk about what we're looking at. This is live right now, so I'm going to go ahead and join my Discord members. Also, the Discord is public if you want to join in and, chat with the community and be a part of these live sessions here that we are recording. So without further ado, let's get straight into it. Let me go and join them and let's get to it. Let's see here. Testing. Should be good. Are we good? Can you guys hear me good? Testing. All right, good. All right, guys. So let's get straight into it. If you guys have any questions, any thing that I am talking about, any questions on the analysis or anything like that, just write down your questions and I'll answer them as we go along. So starting off, it's the last week of February, so not expecting too much on news this week. We do have consumer confidence and we do have core PCE, which is going to be the most major news of this week. Those two are something that we need to pay attention to. They might cause some volatility here, but nothing major, right? We have next week, which is the first month of March, which is we're going to have NFP then. So, and also in March, we do have FOMC that month as well. It's going to be the last month of the quarter. So that is going to be, right, March is going to be a huge month to pay attention to. All right, so nothing insane here on the news side to pay attention to, right? Of course, like I said, we do want to pay attention to consumer confidence and employment claims. It's really a hit or miss there. Not really too much, right? So, but core PCE is something we do want to pay attention to as well. Okay, so we also have CPI for the Australian as well. I mean, I don't trade during that time, so that's not something that's going to really affect me, nor do I trade any odd pairs. So if you are trading any Aussie pairs, that is something you're going to have to look into. This is right before the official start of Asian session, so make sure you're paying attention to that if you have any trades or anything there that you need to protect or close out. Okay, so let's get straight into it. So far what we can see, what happened last week, right, here on DXY, we know where we're at on a higher time frame, right? We know where we're at within the market cycle. We have our accumulation phase here, we have our reaccumulation phase here. We do have a tiny reaccumulation right there, but here's our major phase, and then we have our distribution phase right here. So we've completed a full market cycle. Now we're seeing the market starting to distribute orders. We're starting to come back, target some discounted pricing to get potentially more buyers, or for the market to completely go lower after this. But where we're at right now, we're inside of this reaccumulation here. And yet, as you can see, I have it labeled as a decisional point of interest, right? This right here is going to be a high probability point of interest down here. Here, this area here is much better than this upper area. The reason why is because we're in discounted pricing, right? Down here is where we start getting into discounted pricing. Plus, we do have news here that is supporting this push to the upside. So this might be the next area we do come into if we do not react from here, right? It's going to be much harder for the market to create another leg from here alone, just because if you're thinking about it a pricing way, we're at let me see, it took us around 116 days to make that move towards the upside, right? After seeing all of this buying pressure here, we have a lot of those orders being distributed. So when you see those orders start getting distributed, you want to go towards those orders getting distributed instead of trying to go against it. Why? Because we've already completed our objective. The market cycle is already completed. So now we need to wait for buyers to show themselves. Okay, so when it comes to higher areas like this, you don't want to be too aggressive, because these are the areas that you want to be aggressive at when we're in discounted pricing, right? Buyers are much more lenient here, which we're much more, I would say, assertive, more aggressive to take this market higher. Once this happens, now we need to prove that buyers still want to buy this market up here, which most of the time it doesn't happen. We usually come back to the 50% before we start seeing a huge accumulation start forming out. Now, if we do see that here, that accumulation here, I will look for that potential to take us higher. But to be honest, I do still see us getting a reaction from this area. So I wouldn't say don't be too aggressive here, right? Keep your risk a little bit low if you are looking at DXY, and just going on the opposite side if you're looking at EU or GU and you see those start to reverse because DXY is going higher, be a little bit cautious on those type of moves, because I do see the fact that DXY may pull back for us to mitigate this overall distribution before we get a push lower, which also, if we do see an accumulation here, comes to mitigate our distribution. That also gives us a distribution, redistribution, potentially into our accumulation here, which will be our bearish cycle, right? So we have our accumulation here, reaccumulation, distribution. This is how the market moves. If we do get something like that, then we'll have our accumulation, reaccumulation, and it'll restart again, right? The same cycle with the distribution higher, come back, mitigate, continue like that. That's the most perfect scenario if we do continue these bullish legs towards the upside. All right, so be careful on DXY here. We're still reacting off this area. We can zoom into this price action a little bit. So far, we're seeing weak buyers as we are holding our Asian lows, right? You can see we're holding liquidity here. So we're seeing weak buyers towards the upside. We're not seeing enough momentum just yet, but this is our first reaction off of the area. So we do have a first reaction. This could turn into a bigger accumulation. So we do have this so far. We do have our first potential reaction. I will expect the market to come into here as a minor zone on the lower time frame, so just on the 15-minute. So we could come up here, give a reaction here, give a distribution, come back lower, manipulate these lows that we do have, and that could start our range, right? We could have a good range starting like this. If we do see a range like this, then potentially we do see buyers coming into this market, right? But just following this lower time frame order flow on the 15-minute, so far this is what we have. So I would expect us to get a reaction from here, come back, mitigate this area before we get another push toward the downside. All right, or at least back into the 50%. At least back into the 50% up here before we get another push lower. Okay, and let's turn this here. If we do see that, let's say we do break this high, then of course you're going to expect this to come up here. This is news. We did manipulate liquidity, so this is why I do have this as a minor area that I expect the market to give us a reaction from. All right, so just be cautious on these moves on DXY. This is not a major area. Honestly, just looking at the momentum, I would expect this to continue going lower. All right, but just be careful. So moving on to EU, and if you guys have any questions, like I said, just type them out and I'll answer them as we go on while I'm on the pair. So moving on to EU, we're looking pretty good, right? We're still in our reversal phase here. We do have this push to the upside. We came back, mitigated here at the 80%, and now we're seeing we have bullish market cycle taking us back towards the upside. Now we are leaving liquidity at these highs here. Let Let me make this a little bigger. There you go. So we are leaving liquidity at these highs here. As you guys can see, we are building this liquidity here with these tops. We do also have this high. So we have these highs here that is building liquidity up here. So that is something for us to target. Now, I would not be buying the market from here. Honestly, I would not look for buys here until we make a new high. Okay, so if you're going to be aggressive here on EU, honestly, this is still the most optimal area here to buy this market right here on CPI, right? That is our manipulation. That is a valid manipulation so far. Other than that, we don't have any valid manipulations. These here are just mitigations of that area, but seeing that this is where buyers took this market higher, this is still the most optimal area to buy this market. Anything underneath this low here, I'm going to expect us to take out this liquidity and take out these lows, and for us to just break this, honestly, right? Especially if we do not make a new high first, right? If we just see this market start tumbling down and we break this area, I'm going to expect this to continue lower if we do not make a new high. All right, I would expect us to sweep these highs, react from our supply zone, and then we get a mitigation potentially of this area, and then we'll see if the market wants to continue taking us higher, or are we going to respect this supply zone, or do we have enough do we have enough sellers at this area, which potentially I will say might not be high likely. This is still an area I would look for us to maybe get a reaction from, maybe get a pullback. This is going to be the most optimal thing that I see. We take out these highs, we react from our supply zone, we get a pullback into a demand, and then we continue higher. Reason why is because this is a huge leg to the downside. All right, and we are approaching a huge institutional number. As you can see on the weekly time frame, you can see how low where we're at. Okay, so just based off the weekly time frame, the higher time frame alone, generally around these areas down here are major buying, major buying, right? As we can see here from 2022, we had this push up. Since then, here's our range right here. This could turn into a huge reaccumulation that takes us back up here into this leg. So just make sure you're cautious of that. But just looking on the lower time frame, just what I'm seeing right now, look at the daily time frame real quick. Let's get these lines out of here. I'll put them back later. We'll just get these out of here so we can see the price action pretty clearly. Okay, so what I want you to pay attention to is pay attention to these daily candles here, right? We can see from this is our gap to the downside. Okay, so we're gonna go off this candle. Look at this candle right here. We can see that wick is our mitigation. We close bullish. Here we have a bearish candle that mitigates our wick, and since then we are seeing bullish daily candles, right? Bullish daily candles. Here's our pullback on the daily time frame, and then look at our daily candle right here. So we have one daily candle that engulfs 3 daily candles. Okay, so momentum is definitely towards the buying side right here. So we do have buyer's momentum. So this is why this area in general, I'm going to expect us to either we come down here, take out these lows for the week, mitigate our CPI price action, and then we go higher, or we just go higher from here, take out the liquidity, mitigate our supply zone, we get a pullback, maybe to come into any demand down here, take us higher, targeting our next area, which that will get us back into jar FEBs from this high back into our leg, right? Because we're not in premium pricing right now, we're in discounted pricing. So this is why we are looking for that reversal to get us back into premium before we see more sellers take this market down potentially, right? So zooming in, let's go down to the 15-minute. This is not going to be high probability. Anywhere in here is not going to be high probability just because we haven't confirmed a new high, and we have liquidity up here. But what I will say here, what you can do, we can wait for the market to prove that it wants to go higher. So we can use last week's price action here. We have a accumulation, right? It takes us higher. we get a distro to the downside, right? So we have a redistribution here. Now, seeing this redistribution that takes us lower, we have the accumulation, we have the push low, we have the push lower. This high is what we need. We need this change of character right here, right? If you're going to be aggressive in this area, and let's say the market does not want to come down here, we need to see at least this change of character first. Once you see this change of character, so let's say we see, let's say Asian session comes in, we build some liquidity underneath these lows. Let's say we get a manipulation during Asian session or London session, Frankfurt open, we get a push higher. I would not take this buy until we break at least this high, right? Once we break this high, confirming that potentially we will go higher, we do have liquidity up here. So we don't have any supply that's going to take us lower, but we don't know whether the market wants to come down here to this demand first. So we need to have that change of character first. Once you see that, then we could take a lower risk. You're going to take a lower risk here. This is not going to be high risk area. If you're going to take a high risk or you're going to, you know, be more aggressive, this is where you be aggressive. Right here is low risk. So maybe 0.5%, 0.25% of what you usually risk. And then as the market goes in your favor, maybe you can stack orders because you have extra risk since you didn't risk too much, targeting this supply zone. Okay, only if we get that change of character, only if we see a manipulation, right? We don't want to see this market just, let me delete this real quick. We don't want to see this market just go higher and then you're trying to buy it from nothing, right? We need to see at least a manipulation, at least some type of liquidity manipulation, something, right? We need to see something that proves that buyers were interested right here, because right now we don't have anything that's saying buyers interested. We do have momentum on our side, but we don't have any focal point that we can buy from. Okay, so that is EU right now. Like I said, higher probability is going to be down here. Right now we're going to wait to see if we're going to break this move from Friday. Okay, GU's a little bit better, a lot of bit better. So we have the break here, right? Change of character and validation of supply, BMS, right? Whatever you personally call it, right? It's all the same thing. So seeing this is our last major push towards the downside, we see the market reacts here. We have a reaction, market comes back, we have another reaction. All of this is proving that there was orders here, and right now those orders are getting distributed, right? There was sellers here, there was people looking to sell this market here, institutions, and those orders were getting filled, those orders were getting distributed. We see the reactions from that. Now, doesn't mean there was enough sellers, right? There wasn't enough sellers here. And also that goes back to the point that look where we're at, right? So on the higher time frame, when we go to the daily time frame, looking at our higher time frame legs, we start from here. This is our most verifiable leg to this high. We're in discounted pricing, okay? So it is important that we always check the higher time frame to make sure where we're at. Okay, so we're in discounted pricing. We're in the 80% of this latest leg here. This is why we're looking for buys here on GU. And then if we just stay on the daily time frame real quick, we'll check the momentum, look at the candles. This is the easiest way to check momentum, is by looking at daily candles and seeing how aggressive they are compared to the opposite side. So in this case here, let me delete these real quick so they're not in the way. In this case here, look at our daily candles, right? We barely see any bearish candles here. Every bearish candle we're seeing, they have wicks inside of them. We're not seeing full bearish candles. We're seeing wicked bearish candles, but look at our daily time frame. We're seeing this right here is a nice imbalance on the daily time frame. So this area here is a very nice demand zone. We have a clear daily imbalance here that the market may potentially come and fill. Now, of course, we have to get past this area first, right? We do have another bullish daily candle, as you can see here, very, very bullish daily candle. And this is why I do have this area here that I am looking to buy the market from, targeting our liquidity point, and then overall targeting the supply zone up here, right? So we're going to continue buying GU. Let's zoom in. Let's look at these areas. We'll talk about it a little bit more. Okay, so this is that demand zone, right? It's CPI. Okay, we're not worried about anything in here. All right, all of these are mitigations, so we're not worrying about the mitigations right here. We're looking at this area. This is where we see that manipulation that takes us higher. This is the focal point of our demand. Okay, so we don't want to try to take these secondary areas. When you're trading and you're looking at this, you have to understand how the market moves. If this is our focal point, all of these are reactions from our focal point. So as the market does this, if you're not in this here, like on this day, and you're taking these areas, that's when you want to be aggressive on these areas. When the market creates something like this and you're seeing pushes and it's reacting, this is where you want to be aggressive at this point here. As the market is taking it higher, this is where that momentum got introduced. Now, when the market comes back lower, right? Let's say we do come back lower. This is not where you're going to look for your buys. This is where you're going to look for your buys, because this is the focal point. This is what creates these reactions here. Okay, so this is the focal point. Now, if momentum is going bearish, momentum, this is where we're going to meet the opposite side of momentum. Why? Because this is where it all started. Okay, not here. So mitigations are the best when you're part of the momentum that's already creating that, right? Your focal point is here, your mitigations are here. This is where you be aggressive. You don't wait for the market to come back down after you already see the momentum carry us higher and then try to take your entries off of these areas. All right. So with that being said, let's zoom in here. We do have a manipulation of all of these lows. We do have a valid move towards the upside. As you guys can see on the daily time frame, this is a bullish candle. So, and this is a reaccumulation. We have a break of market structure, everything, right? Now, your safest entry that you could take here is just taking this whole area, right? This is our manipulation. This is what took us lower. So that is where that blue line is, right? So at the top of the manipulation. This orange area is our reaccumulation that took out our high. Okay, as we zoom in, you're going to see it here. Let's go to the 5 minute. So boom, right? You can see we have the distro, and then boom, we invalidate that distro on the 1 minute time frame. We create a BMS. So this is the area that invalidates the high. That's why I have this labeled out. So if the market comes in here and let's say you're seeing an accumulation, you could take maybe a 0.5, maybe 0.25, depending on, you know, how much you're risking, right? But just lower risk. Okay, lower risk. Okay, so lower risk on this area here. And let's say we get another drive to the downside. If the market continues lower, you take another position, maybe 0.5. Now you're risking 1%. Both stop losses are going down here. Okay, so that is just in case. I have this area here just in case the market does not come down here to tap that order. We could still buy the market from this area here, because this is what really caused that impulsive move, right? We do have the manipulation down here, but this is what really caused that impulsive move towards the upside. And as we know, the market doesn't always come and tap our limit order or always come to the 80%. We don't always get the huge move. Okay, so I could see us tapping the 50% here and then going higher. Okay, so that could potentially happen. If you do see that, look at this area and risk accordingly. Okay, most optimal area is just going to be a limit order here at the top of this, just taking the whole reaccumulation itself. So if you want an easy trade, just put a limit order here and just keep this trade running. All right, now honestly, I would wait until the market opens. Do not put this limit order here right now. Wait until the market opens, because we don't know if we're gonna gap or anything like that. You don't know what could happen. Okay, so wait till the market actually opens and wait maybe an hour or two until we get into Asian session. Once we get into Asian session over the night, then you can place your limit order, because you want to place your limit order before London session, because Frankfurt could give us a manipulation lower that, you know, takes us into that trade, and then we get a reaction from that. So you don't want to miss that, but just wait until the market opens so you avoid any gaps or anything like that that may be going on over the weekend. So pretty simple here on GU. Like I said, if we do break this area, this is going to be our demand zone that we're looking for down here. All right, and I mean, this is our area that invalidated our supply. So this is a good, very, very, very good high probability area as well. So these are the 2 points that we're looking at. All right. And we're going to be targeting not Asian highs, but just all of this liquidity up here. I'm not sure what sessions these are, but just all this liquidity up here, and then overall the supply zone. That's where I'll be looking to see if we see potential sellers to take us down for our next leg. But like I said, we could invalidate this whole area. Just be cautious of that. On the higher time frame, we do see potentially that this could be an accumulation. We have 1, we have 2, we have 3 drives, right? This is our latest leg, so we do have to break this high for us to get a higher time frame accumulation here on GU. But just keep that in mind of where we're at, okay? Let's see. Let's go to gold. All right, so last week, on the last week call, we did talk about this area here on gold. I don't know if anyone took any entries there, but this right here is the CPI manipulation. So I had this demand zone. Here was the CPI that mitigated this area. We created a push towards the upside. We see the market came down. We mitigated that CPI here. And we have our another push. We took out our highs. Okay. So going on Friday, what I was looking at is I was looking at this potential bullish market cycle in here. You guys can see that sometimes gold doesn't really care about Asian lows, so it will leave it sometimes. Doesn't mean that we don't, be cautious of that. Okay. But sometimes gold just really doesn't care about Asian lows, except for here today. We can see, well, not today, but on Friday, we can see here that we actually took these lows, right? Pretty clean manipulation here. You can see this candle towards the downside. And then we have another area here, which creates a reaccumulation. Here's our next candle. So this is our mitigation candle. So we have our manipulation and then we have our mitigation. None of this is confirmed until we break a new high. But what we can do here, since we are already in a bullish market cycle, everything is bullish. Momentum is bullish market cycle. We have this market is just bullish, right? So we can see we have clear momentum towards the upside. The 3,000 is going to be the next target. And if you guys were listening and anybody that just bought gold, like let's say you're just investing in gold, anybody just bought gold from, where I mentioned that earlier, like we're almost here. So you're in major profits if you would have just bought gold down here like a month ago when I told you guys to just buy gold. You're in major profits right now. Okay, if you're like swinging or anything like that. So now for us traders, what can we do? So we have our manipulation. Let's put that there. That's our manipulation. We have the reaccumulation, right? So here's our distribution. Mitigates this area. So here is your focal point. Okay, this is going to be the area that we're going to look into. Now we still need confirmation, so we're not going to take a limit order here. We're not going to be aggressive here. We do have liquidity at the top. So what we're going to do here, wait for the market to open, of course, and this is going to be your buying area. Okay, this is where you're going to look for the market to give you any type of accumulation, maybe on the 1 minute or anything here that shows buyers interest. Let's say we have Asian session come in, we get a manipulation and the market goes higher. We take out this high. There's your entry, right? Take it higher, target liquidity. Okay. Or let's say the market just comes down here and we just form an accumulation, right? Once we confirm the accumulation, take your entry, stop loss goes underneath this low, let the market go, right? Target this high, and then we target 3,000. Okay, that's the only reasonable area because this market still can, if we're looking at our legs. So now let's redo this. Boom, right? So this didn't make a new high, so that is like that. All right, so this is the low of our leg. This is currently the high, and that is going to be our fibs. All right, so we still can come down to the 50% or lower before we see buyers get into this market. All right, so that's why we want to be cautious here. All right, we need confirmations here. Do not be aggressive. Now, before I go into these extra pairs, is there any specific pairs here that you guys want me to cover from the people that's here? Any specific pairs before, because all of these are extra pairs. So anything specific that you guys want me to cover before I go into these extra ones here? Or any specific ones out of these that you guys really want to see? Yeah. Okay, so let's keep going. All right, UCAD. So UCAD didn't really do much over this week. Like I said, we are in a huge push towards the upside on this market. Now, I definitely want to see us fill up this. Okay, I definitely want to see us feel some price action here. I could definitely see us form like a huge accumulation before we go higher. Okay, so nothing specific except this area. All right, this right here is news, but you can see how we're reacting off of this news area. We're not really getting too much momentum here. We can see the market is kind of struggling to buy from this area. So especially after seeing that, right, we see a pressure to the downside. We see large selling candles, but we don't replicate that, right? We're seeing, of course, right here, we see this move to the upside, immediately gets filled, immediately breaks it. So not really much going on here. So I could definitely see this market come higher, react off of this redistribution here, and for us to just continue lower. Okay, taking out all of that liquidity, coming into our discounted pricing. Potentially, I would hope we come all the way down here before we get a push higher. And for this to happen, that means that DXY will fall more. So it really depends on what DXY is going to do. So if DXY continues to go lower, best believe we're going to see UCAD take out all of these lows here before we see another push higher. All right. And then pretty sure it's going to be the same thing on UCHEF. But UCHEF might be cleaner. Let's see. Yeah, pretty much the same thing. So since we got our change of character here, you guys can see. So this is why it's important to label your change of character, right? Because it's literally what it is, right? It's a change of character. So as you can see, this market is going higher, right? From here, you can see this market is going higher. Look at the impulses. Look at these big pushes towards the upside, right? When the market does something like this and we invalidate one of these pushes, that is a sign that strength is not as strong as it was. Okay, that means whatever's going on here at these price points, we have sellers that are right here at these price points that are not allowing this market to go higher or as strong as we were going before. So as you can see, after this change of character, even though the market continues going higher, look how we failed to make a new high, right? The market is not as strong as it was here, right? We had complete buyers in control taking this market higher. As soon as we create this change of character, that creates a little ripple in the market saying, hey, you know, maybe this market is not as bullish as we thought. Okay, so you can see this market is creating liquidity. We still have not broken this low yet. This is what I was looking for. So we still have not broken this low yet. Once we break this low here, this is still a valid supply zone. But honestly, I would not advise to take trades from here just because of the liquidity that we're forming up here. Okay, I had this area here last week because that could have been our first reaction towards the upside to actually take this lower. But now seeing how this market is going, I wouldn't even look for sales there anymore. We're creating a lot of liquidity and the momentum is just not there, right? Look at these buyers. They're just not there. Okay. And then we have major sell candles like this, major sell candles to the downside. Okay. So momentum is definitely shifting back to the downside. So we do want to look for sales. All right. If you're trading USC Chef, you want to look for sales. Now zooming into here is going to be your area. Wait until we break this low, of course, right? Wait until we actually break this low. Once we do that, that is going to be your next area to sell. Okay, if the market is not pulling back, we're going to continue looking for redistributions. So redistributions is exactly what you see here on EU. All right, it has to look like this. It has to look like this here. We have to see an accumulation. So we have to see a range. We have to see the accumulation. We have to see the market actually push higher, and then we see it invalidate. That is confirmed redistribution. This is going to be the highest probability redistribution. Okay, that is the best one that you want to see. So if we're going to look for sales out of the middle of nowhere, this, you at least want to see this, because we can at least add more rules to this. Because what we can say here, as we're looking at this, we're saying, okay, we have an accumulation. So we have buyers interested in the market. Cool. We have the market going higher. Remember, there's liquidity above every high and every low. So there's liquidity above these highs. Okay. Market goes higher, and then we invalidate our accumulation. That means that whoever institution, small, big, that was trying to take the market higher from here failed to do so. So whatever buying interests here failed to do so. If buying interest failed, that means that sellers are in control. So it gives us more confidence to be able to sell from an area like this versus us just seeing a market go like this and then continue lower. This is also a redistribution, right? This, we fall through the ice, is also a redistribution. Both of these are redistributions. This here is going to be higher probability than this here because of this accumulation at the bottom. So we see that actual buyers got invalidated. All right, that's why this is the one that we want to see. When we're looking at the second one, this one right here, the one I just showed you guys, these type of redistributions I love to see on a higher move, like higher time frame. Okay, when it's a higher time frame, this is also a very valid redistribution you can take a sell from. But when we're looking at the lower time frame, 5 minute or 15 minute, 1 minute, whatever, we want to see that accumulation get invalidated. All right. Okay, so USD Chef, once we get those moves to the downside, I will expect us to fill up all of this imbalance here, take out these lows, and this is going to be your next area to look for buying opportunities. As you can see, just following the momentum towards the upside, we have accumulation, reaccumulation, reaccumulation. We have liquidity here. We actually have a lot of liquidity. Hold on. There you go. Right? So this is going to be the most optimal area to look for more buyers to take this market higher, targeting these highs. All right. So look for sales, look for those opportunities to fill up all of this imbalance over here. All right, let's shuffle through these a little bit. We have ACAD. Here's our leg from this low to that high. We can see the market has came down 50%. Okay, at the 50%, what have we done? We built liquidity. So we have low, low, low. Here's the manipulation of that low. Market pushes higher, breaks the high. So we have our change of character, which is telling us that this market wants to go higher from the 50%. Since then, we're seeing this market push higher. Now, what I don't like so far today is this, right? I don't like this. It's a good inducement. So if we're going to buy, we're not going to look for buys directly from here. So we're going to look for one or two things. Either the market has to prove buyers here, which we're going to talk about, or the easiest trade is to look for buys underneath these lows, right? Coming back into our demand zone down here, near our 50% to take us higher. Okay, now here we're going to need this market to go higher. So we're going to need to see this market create some range. We need to see a manipulation, and we need to see a break of structure. Once you see that, then I would say you can buy from that, take it higher. Okay, until then, if you don't see that, don't buy from here because there's too much liquidity underneath here. It's too obvious. Okay, it's too obvious. That is not something that I would look to trade from here. A-Chef. I don't think I finished marking this up. Okay, so we broke the high. It's weak buyers. Let's go on daily time frame. Okay. We didn't make it up here? No. We're going to use the whole distribution. See if we made it into that at least. Okay, barely. Okay, so we came back into premium pricing. See, this market has a major fall off. Okay, since then, what do we see? Reaction goes higher. Okay, so we have a bearish leg from here to here. We invalidate that. Boom. Now we see this market trying to push higher. Okay, so I would be careful here on A-Chef. Now, if I'm looking on the lower time frame, just from where we're at, let's look at this right here. Okay, so let's draw our fibs and let's see where we're at. Okay, from this high to this low here, we are definitely around the 50%. Okay, so we want to be careful here because we see the market is ranging at the 50%. So what I can expect here and what I would probably want to see is these highs being manipulated. Okay, most definitely I would love to see these highs be manipulated, probably tap into the 80, get back closer to our actual, you know, supply before we see another downtrend to the downside. And so going to the lower time frame, we can see that is kind of what this market looks like it wants to do here. So just going on the lowest leg, right? Looking at our lowest leg from these highs here, which have liquidity to this low, we see that we have invalidated that. Okay, with that push, we have a reaction lower. Okay, we failed to make a new low, which is showing interest in buyers, right? We have another push to the upside, breaking this high. Okay, so here's what we can do. From this low to this high is what we're going to be trading. So this low to whatever high that we've created, which is up here. This is going to be what we're going to look for. Okay, so we can see the market here is honestly looking to take out all of these lows. Look at this push to the downside. What I would do, liquidity. Boom, let's go to the 30-minute. What do we have? We have our manipulation here. We kept these Asian highs, so we want to be careful there. I would be looking for sales out of here. This is going to be a low probability area because we do have some liquidity up here at these highs, so we want to be careful. Look for confirmation entries, right? So we're going to look for sales out of this area to take out the rest of these lows if we do pull back, right? If not, same thing that we've been always talking about, redistribution, right? Look for that accumulation, look for the invalidation, follow this lower, take out this liquidity just to get us back into the 50%. This is where I'd expect the market. Down here is where I'd expect us to create another range because this market likes to range. So if you trade A-Chef, this market likes to range a lot. So I would expect another range here before we see another potential upswing. Okay. And let's go to GCAD real quick, and then we'll talk about some indices. Yeah, it ranges a lot. I know. All right, so on GCAD, what can we see? So we had a manipulation of these highs. See the market push lower, create a BOS. Okay, well, here's our reaction. And now we're seeing this market is pushing back towards the upside. Okay, so we create a change of character here. Here's our change of character. Since then, we've been seeing manipulations lower, manipulation lower, manipulation lower. We left these lows. There's another manipulation right here. Here's another manipulation right here. Here's another manipulation right here. Honestly, just look at the trend. I mean, we're seeing the market take out Asian lows, right? Take out lows, go higher. Take out lows, go higher. So what are we gonna expect? Take out lows, go higher. So follow the trend, follow the momentum. Once we get a clear break of these highs, we need a clear break. Let the market sit up here. This is gonna be where you're gonna look for buys. All right. Take this market back higher. Don't fight against it. I do know that we did react off this supply zone, but we're seeing that after reacting off this supply zone, this market failed to continue this bearish market cycle. So let me delete this real quick, right? So as you guys can see here, as we are going lower, and then we start creating our bearish market cycle to the downside, market completely just invalidated that. So we're coming up here to fill in balance, and honestly, I think we just continue going higher just by how this reacted. Okay, so just follow this momentum that the market is showing you, honestly, because I think we just continue higher because we did not go low enough, nor did we make a new low. So this is still valid, but like I told you guys, I don't like taking two mitigations off the same supply area. So I would not look for another sell here. Follow what the market is showing us right now. Keep buying it until we get back to the supply zone. If we see a rejection, we see a reaction, just wait and see how we respect this area, because potentially we might just fly past this, honestly. It's a nice reaction, but if the reaction is not enough to give us a new low, then it didn't really do anything, right? But it's a good reaction though, for the most part. So let's go into these indices real quick. So last week, we'll talk about US 30. So last week, major drop. US 30, NAS, XPX, stocks, everything, right? So major selling pressure. Major selling pressure. And you know, I actually did not take a sell here. Of course, regretting it now. But so once we did this move here, and I kind of stopped trading early last week. Once we did this move here, or was it? So we went past these lows right here, right? As I was looking at this, what did we have? We had CPI. So let me just kind of retrace because I deleted everything. Let me retrace. So we had CPI. I was looking at us mitigating CPI, right? We're mitigating CPI 50%. I was looking for small buys there all last week. Took a couple buys, but as you can see, every time the market came back lower. So I didn't really secure enough profits because I was targeting these highs and I was targeting new highs. Okay, but I secured a little bit. Wasn't too much, right? It wasn't as much as I could have basically on my buys because we always came back. Okay, so what day did this happen? This happened on Thursday. Yeah, so this one I stopped trading. All right, so Thursday had major push underneath these lows. So what I was looking for, I was looking to see if the market was going to accumulate underneath these lows, which we did not. Okay, so major selling pressure, major selling pressure to the downside. Now, honestly, I was not looking for sales. I was not going to take sales until we broke this low. Until we invalidate CPI, was not going to take sales. All right, and we did that. And then after Thursday, I was like, okay, boom, we broke this low. Friday came, I seen this area, I was looking for sales here. We did not pull back, so I just didn't trade for the rest of the day. I left the market alone, came back later, and we have this push here. So now what do we do? So I already started marking up later on Friday when I seen that we did create this major move to the downside, and we just have momentum, right? So I do have these minor areas that I don't think the market is going to pull back to, and I'm going to be honest with you. So I will delete these for now. I will delete these for now. Now, I am looking for this market to still continue lower, at least back down here to fill this imbalance. So I will be looking for sales here tomorrow. Once this market does open, I'm hoping we get a pullback. I'm hoping we get something. I'm hoping that on equities open, we just get a spike towards the upside. If I see that, I will be selling up here, or at least around here, this institutional price point. I will be looking for potential sales. That's if we can get back into those areas that I just deleted. That's if we do get back into those areas that I just deleted. But like I said, I don't have hope that we'll get back all the way up there. Just how indices move, once they get into a directional bias, it stays like that. And I want you guys to kind of like look at that. Once we get into a directional bias, it just goes lower. Okay, or once we go higher, we just go higher. Okay, there's rarely like any major pullbacks, and then you're gonna see proof of that as like you look at indices more. Okay, once they get into a momentum and they get into a directional bias, it stays that way. So since we have very, very bearish momentum right now, I'm gonna expect this momentum to continue onto Monday. So hopefully, what I will be looking for is something here. Maybe let's say we get some type of range. We are at an institutional price point, so I'm going to use that to our advantage. Let's say we stay right here. Let's say we get some liquidity, take out those highs. If we go back above this 43,500, if we go up here and we close, let's say we come back beneath it, I will be looking for sales. I'll put my stop loss somewhere up here. I'll kind of give it a little bit extra space. As you guys know, I'll take it like a huge stop loss, probably up here, give it a little extra space above the manipulation, and I will let this market fall until we feel this imbalance. So that is going to be something I'm looking for. I'm going to be looking to sell this until we come down here to this imbalance. This is where I will be looking for potential buying opportunities here. All right. So continue following the momentum. Wait for the market to open. We'll probably create a fake out, a manipulation or something. And if we see a manipulation higher, we're going to try to look for that distribution or something at the top to continue us lower. Okay. The only way that I'd expect this market to buy from here is if we form an accumulation. Okay. As you can see, anytime this market is going to turn around, we range first, right? Here we had heavy bullish momentum. We got a distribution, then we go lower. We can see here we have heavy bearish momentum to the downside. This market stopped, we created an accumulation, and then we turned around. So I'm not going to expect this market to just turn around and start going higher unless something major happens in the economy that, you know, just does something like that. But we're not gonna bet on that, right? Those type of things happen once in a while, once in a lifetime. Okay, that'll create some type of move like that. So I will expect this market to slow down before we see a reaction that takes us higher. All right, so same thing on NAS. Heavy bearish momentum. We are inside of this demand zone here, which is our CPI. As you can see, US 30 invalidated CPI already, so doesn't really hold much weight right now. But we do have a new high that's been created. All right, let me move these. Okay, we do have a new high that's been created. So from this low to this is our high. So this whole area is going to be our leg. Okay, so I can see this market come down here underneath anywhere by the 50% before we see a buying opportunity. This is CPI. Like I said, this area is still valid, but looking at the momentum, do not just buy this market here. Wait until we open on Monday. Wait until we see something. I need to see an accumulation or something come from here. Okay, same thing on XPX. Huge push. You can see XPX is already invalidating its demand zone here. These markets made all-time highs this week, so it's kind of expected that we do get this selling pressure, but I wasn't expecting it to be that heavy. So with indices, just be careful, right? Right now, the momentum is bearish, but be careful. I would continue following the bearish momentum. That is going to be the highest probability thing to do. Okay, don't look for buys yet until we see a major accumulation come in. All right, and I think that's all the pairs that I want to cover. We do have Tesla here. Tesla is still continuing lower. Like I told you guys, underneath 400, look for sales to the downside. All right, we're gonna keep expecting. I'm gonna keep expecting this market to sell until we get back to here. All right, to this demand zone. All right. So, do you guys have any questions or any other pairs you guys want me to cover? Anybody got it? Anybody have any questions, any concerns, anything that that you're struggling with? If not, I'm going to end the recording, but I will stay here for another 5 to 10 minutes just in case. But I am going to end the recording if you guys do not have any questions. I don't want the recording to go on for too long, so I'm going to end it right here.